The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the December 17th, terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential. Because living up to our potential, folks, that's something we must master each and every day. So let's begin our day with some empowering beliefs. Of course, my favorite is become your own electrician, the electrician of your beliefs. You know, beliefs, they've got the power to create and, of course, the power to destroy. You and I, we have that incredible, extraordinary, awesome ability to take any experience of our lives and create a meaning that, well, disempowers us, or one that literally can save our lives and empower us and take us to places we never even dreamed of. Think about it like this. There's only one thing you and I can control in life, and that's the meaning that we give to something. That's the beauty of the markets we trade. We've got bulls, we've got bears. One that sees an event as a selling opportunity, and one a buying opportunity. Your beliefs, the meaning that you give to these events, folks, you are the one in control of that meaning. Really pretty cool when you think of that awesome power that you and I share. You know, what we can or cannot do, what we consider possible or impossible, is rarely a function of our true capability. It's more likely a function of our beliefs about who we are. And that matters because all of our breakthroughs, all of our personal breakthroughs, they begin with a change in beliefs. The question should always be, how do we change, Steve-O? Well, that's a great question. I've found the most effective way to change is to get our brain to associate massive pain, I mean massive pain, to the old disempowering belief or belief system. We've got to believe at the deepest level, at our core, that deepest disempowering belief has cost us in our past. And if we continue, it'll only cost us in our future. When we understand that pain, folks, that's really what's called the Charles Dickens process. So it's the perfect time of the year to take yourself through that. Because sometimes knowing what we don't want, which is going to be all that pain, is just as important as knowing what we do want. I really believe you need to know both. Because what you need to do is you need to replace that disempowering belief with one that will empower you, one that will provide tremendous pleasure. And you need to have that important understanding and idea of adopting that new empowering belief system. You and I, we've got to know that at any moment, a decision that we make can and will change the course of our life forever. Could be the very next person we stand behind in line, sit next to on an airplane, the next phone call you or I make or receive, the very next movie we see, book we read, page we turn. Maybe it's a workshop that we attend. Any of these could be the single thing that causes the floodgates to open. And then all of the things that we've been waiting for will fall right into place. And this Thursday evening, I'll be sharing with everyone, wishing to feed their mind with a system that is easy to use, so easy to understand because it takes complex data and it makes it simple. It's the momentum of the market. And momentum, folks, it is going to change out there. So sign up. It's real easy to sign up for it. We are giving everyone free access to my newsletter. If you've never subscribed to the newsletter service, this last through Thursday, go to the homepage of TFNN.com. Sign up for my newsletter service, Mastering Probability. It's going to give you one, access to Thursday's workshop, but you don't have to be there live to attend. It's archived on your members page for 30 days. Number two, the money management workshop that you get, and you must take the money management workshop. That's worth $150, so that's my gift to you as well. You've got the position size calculator. Let me teach you about the most important thing you can be doing when it comes to your trading. That is called position sizing out there. You get that whole kit and caboodle. That's my gift to you this holiday season. No charge to your credit card, no risk on your part. Just go to the homepage of TFNN.com, sign up, do it now, no procrastination. So many things happening in our life. Let's start off with these markets here. Right now, what are they doing? Well, the Dow is up 18 points. It's trading out at 15,902. S&P is up 2. Down 2, but soon will be up 2. Apparently, that's just must have been a slip. I didn't say that. You've got the composite. It's down 4 points. Russell 2000 off 2. Apple's off 58 cents. Lead the charge the upside. Puma Biotechnology, it's up $8.50, 9.5%. Google up $7 and change. iRobot up $6. Netflix up $5. MasterCard up $4. 3M up 3.5. Commvault Systems up 3.5. Visa up $2.77. To the downside, you got Priceline. It's trading out at $11.61. It's off 1%. Not a big deal. It's off 12 points. Fact Set Research, FDS, off 560. That's down about almost 5%. Pharmacyclics, that's continuing to pull back a bit here, down about $4 off 3 7/10%. Rockwell Medical off $3. You've got Biogen, BIIB off 285. Celgene off 237. Our call number, 877-927-6648. Give us a call, folks. We can certainly take a look at your stock chart. I see a question from Angie in the Den. It says Euro, Japanese yen. So let's go start off with our favorite currency pair out here, the Euro, Japanese yen. Let's go see what it's doing. But let's take a look at it from kind of a longer-term picture out here. So let's go take a look at this chart. I have to find it first. So that means my eyes need to see the label that says GE. There we go. Because here I have a number of different what I call divergent patterns that typically mean something in the market. So I like to be paying attention to divergence out here. Let's take a look at the Euro-Japanese yen. Oh, yeah, let's take a look at the Euro-Japanese yen. We can see here, now this is a chart here on the Euro-Japanese yen. I'm taking you back into what looks like January or December of 2012. Now, on this chart here, what you're looking at, let me just go ahead and update this line here so I can move this, and we'll just move this down right here. When we take a look at the Euro-Japanese yen, let's go from where we're at now, and then we'll go backwards in time. What we can see here on the top portion of the chart, it's the S&P 500. And the S&P 500, you can see that it clearly has made a lower low. And at the same time, and we're using the swing points here from back right around December the 5th, and then we had a swing point low that went on Friday, so it was at around December 13th out here. So you can see made a lower low inside the S&P 500. What do we have going on inside of the Euro-Japanese yen? Well, what we had a higher low that was taking place at the same time. This is a divergence that in the past has mattered. And not only has it mattered, what it has done, folks, it has the way that the market resolves itself as it catches up to what the euro-yen is doing here. We come back and take a look at this divergent pattern here. This takes us back into about July of 2013. You had the S&P made a higher high back into the August 2nd time frame. What was going on inside the euro-Japanese yen? We were making a lower high. That led to a divergence that mattered. You saw the market actually correct a bit, make a low back in the middle of August. This is in 2013. We come back a little bit further out here. This is coming into the time frame of June of 2013 to looks like June 26th. So about the middle of June out here, we had the euro-Japanese yen making a higher low. We had the U.S. With the S&P 500 making a lower low. What actually won out here? What won out was the euro-Japanese yen. You see, we can keep coming back, and we can keep doing this, and I have no problem doing this, but what you can see here is that the euro-Japanese yen, so this is taking a look at it on a longer-term time frame, what's going on inside the daily chart. But what I can tell you is if you go study this currency pair, and this currency pair is the carry trade currency pair for the markets out here, it's important to understand these divergent patterns out here, as well as lack of divergence. But these divergent patterns, what they show you is they show you that in this case here, that we should see higher price in these markets. So that is what this currency pair is telling us. Now, I've got another divergent chart, so as long as Angie threw me over into the divergent charts out here of taking a look at the euro-Japanese yen, let's go take a look at another divergent chart out here that we want to pay attention to. It is the general. So as we go take a look at what's going on inside of General Electric out here. Now, General Electric is a great bellwether of the market, of the Dow. Now, it has basically little impact on as far as the number of points move inside of the Dow, but a great bellwether for some reason, maybe because their tentacles are in so many different businesses out here. But when you do see a divergence here, it tends to resolve itself. GE tends to actually give us the message ahead of time. So here is the chart for GE. Let's take a look at the current divergent pattern. And what this current divergent pattern shows is coming off of the highs back here in November of 2013, so right around that Thanksgiving time frame. We can see this little descending price channel that has been forming here. The bottom chart on my screen right now, that is the Dow. Now, if we take a look at GE, it's actually making a little rising price channel that it is traveling in at the moment. So GE, now, these are tools that do not, unfortunately, they do not tell us when. They are not timing tools. What they are is they're divergences that are worth noting. The most important one that's worth noting, in my opinion, is the Euro-Japanese yen out there. And speaking of the Euro-Japanese yen, let's go stay with the currencies. We didn't look at really much of the markets here during the last hour, so let's make up for that. And let's take a look at the currency pair. Let's take a look at the Euro-Japanese yen. Oh, it's on the monthly basis. So let's take a look at what it is actually doing. Now, if you are watching us on Tiger TV here, you're taking a look at a monthly chart. If you're listening on the radio, your mobile device at tfnn.mobi, thank you for doing that. Remember, you can get the live stream of the show by going to the homepage at tfnn.com. Upper right-hand side, you'll see a button, 3 little smartphone-type devices. Click on that. The show streams live. Of course, the show is also archived, and you can get this on Channel 9. Now, 142.92. What is that little dark blue, black-looking line going across my screen out there? That is the largest number of co-located opens and closes on my screen here. This month here, we've seen a price point of 142.81, 142.81, 142.92 is that primary trading range boundary line. No wonder that has acted as a little bit of a deflection point out here. So that is normal. We have not seen any kind of bearish reversal signal here inside of the Euro-Japanese yen on the monthly chart. If we go from the swing point high, July 31st, all the way down to the low that took place here on July 31st. How about the July to July? July 31st of 2012 was the low, and the July 31st, 2008 was the high out here. Now, the 0.618 retracement, that number is 140.97. You're at 141.37. Also, so you've got a primary trading range boundary line that it's hit. You've got the 0.618 retracement. Just kind of a natural area here for it to take a little bit of a rest before it heads on up to sweet 786 out here. That'll take it into about the 153 range. If that's what we see unfold, remember, this is a directional thing, but if that is in fact what we see unfold, that suggests higher prices in the market. If we see some kind of reversal, it'll have to be a huge reversal inside of the Euro-Japanese yen because it's coming off of a wide-ranging bar in the month of November. So it'll take a substantial reversal inside of the Euro-Japanese yen on the monthly basis. So that means let's go take a look at the weekly chart out here. Let's go see what the weekly chart is doing. The weekly chart, if you are a user of the Chapman wave out here, I can come all the way down to the lows. The low that took place the week of July 27th. And if we do a little bit of a peak counter out here right now, what it is in the last week set up that fourth peak. So we're still in that now. Of course, this week is not over. So if we do get that fourth peak, usually where you might see some kind of a pullback, then great. Now, here's the key with this week, and this is what we want to see. I believe that Basil refers to it as an instant restart, and that's where this week here, if all that the Euro-Japanese yen does is travel with inside this candle, then so long as we see a move higher above last week, which is at 142.81, that starts our next 4 sessions to the upside. That is on the Euro-Japanese yen. It does want higher price. That should lead to higher price eventually in our markets. 877-927-6648. I don't see a major top in place. We'll be right back, folks.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 6, S&P is off 3. Let's continue looking at the currency contracts out here. Let's look at the Great British Pound, U.S. dollar currency pairs, I should say. And we're looking at a weekly chart for the Great British Pound. Now, you can see you got two. You can take a look at this consolidation that the Great British Pound has been traveling in since July of 2010. The low of the consolidation, that's down at the 153 level. The high of the consolidation, which it hit last week, is out at the 164-ish area. So trying to break through last week, trying to break through that consolidation, hasn't done it. Now we've seen a bit of a reversal here, but that reversal yet still traveling with inside the body and the candle of this session here from November 29th. So until we really see a break of that low out here, it could just simply be recharging. So we know that it ran into resistance, good long-term resistance out here again. In fact, it goes back, the high of that resistance level goes back to January 22nd of 2010. We're almost in 2014. So a 4-year consolidation inside of the Great British Pound. So that's what was happening on the weekly chart. If we take a look at the daily chart out here, the daily chart shows that price right now is coming back and testing this little consolidation pattern, a very shorter term consolidation pattern inside the Great British Pound. This one began right around the middle of September and broke out of that consolidation on November 27th out here. So it breaks out of a consolidation. You break out of consolidations, they come back, they test it, they say if it's real. If we see it close back below the 162 level, that ought to say that price will come back and test the lower part of the consolidation right around 158 or so. So right now today, an important session here for the great British pound. If we take a look at retracements just simply from a daily basis from the last swing point low, November 12th, up to the swing point high that came in here on December the 10th, well, we'll see. We're really just at the dead cat bounce, the 0.382, the normal retracement right around 162.31. You break that, you get below that, and that says, okay, maybe we're going to come all the way back down to the bottom, at least the 160.87 area, at least the 0.618 retracement level. Let's go take a look at the Queen. Let's go see what the Queen Mum is doing out here. We know that the euro has run into its significant resistance area. That's the resistance coming off of this, the downtrend channel level. That's coming off of the 2008 July open session, the week July 18, 2008. That open is at 159.21. That's your touch point. Your next touch point is either the close of the week of April 29th or the open on May 6th out there in 2011. You can see that has been a very strong area of resistance out here. It's also got horizontal resistance, that big old bear, that bearish engulfing candle that's sitting out there. This is the weekly chart we're looking at from November the 1st out here. That says a pull back into 130. Well, my expectation is that we would see we would probably see a pullback into the bottom of this rising price channel out here. That's what we ought to see. Now, if in fact you get above the 138.09 level, then you've got a trend line resistance. If we never see this trend get taken out, tested, retested, and a move back above, then the euro U.S. dollar will have broken out of a extremely long-term descending price channel out there. That would be extremely bullish for the euro and bearish for the dollar. And that would also probably be bearish for the U.S. dollar index out there because of the weighting structure of the euro. But what we know right now is that that is not the case, just simply price stopping at a resistance level, and that is on the weekly chart. On the daily chart, let's go see what pattern we've got coming out here on the daily chart. If I can find that, here we go. Here's the daily chart. I see a red line. No, that's just the 1 to 1, A to B equals CD on the way up, so nothing more than that. On the daily chart here, we're not really seeing a ton of movement, just really sideways action out here after making the 1 to 1, A to B equals CD and then pulling back into the retracement. Let's check out that retracement here. See what it did. So the A point of the A to B equals CD, that started on July 9th, 2013. That was a price level 127.54. Completed its move out here on October 5th. And really all it's done, it's probably made about a 50% retracement in essence. So pulling back here a bit this morning. Look, a normal move here, a normal retracement move off of the low, that swing point from November 7th up to the high that was put in here on December 11th. The dead cat bounce takes you to 136.1 or 134.91. Likely the pullback retracement levels here for the euro U.S. dollar. So, seeing resistance in the weekly, it would now make sense that we would see a bit of a pullback here inside of the euro. Let's go check out the ETF structures now. Let's see what we've got going on inside the Qs, diamonds, small caps, the whole kit, and the caboodle. Yesterday's move up inside the diamonds was with volume of 7 million shares. That's 7 million shares going into the downdraft of 7.9 million shares. Not too shabby on yesterday's move higher. So far today, we've seen volume of about 1.6 million shares in the first hour of trading. Not too bad as well, but an inside day. 877-927-6648. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's flat. It's down 44 cents a quarter right now. S&P is off $5. NASDAQ Composites down 9. Russell's off $3. NASDAQ 100 off 7. And we'll go back to the ETFs. We'll go back to the index ETFs. But first, let's to get a better gauge and a feel for what's going on inside the markets, we're going to go peek in on the 30-minute charts for each of the index futures contracts. This helps us to understand what's going on. Let's start off with the Dow futures here. Dow futures, what they did here this morning. Now, what you're looking at, if you're watching this on Tiger TV, let me get rid of the volume bars out here, since this is the current contract. It's the March contract that we're taking a look at. What you can see, I've drawn in the descending price channel, and you can see that price here this morning, as it was making its high, and that was coming in at 10 o'clock this morning, we saw price get up to 15,868. As soon as it got up there, it got smacked back by that descending price channel. Now, this is going to be key to see if there's any kind of a breakout, because you want the Dow to certainly break out of this descending price channel. Now, let's switch over to the diamonds. Let's go check out. We looked at the well, hold on. Let's go. I'm going to switch back and forth. So we'll go from the futures contracts, and we'll go to the daily contract inside the diamonds. So yesterday we were saying the diamonds here was up with 7 million shares. Not too bad going into a downdraft session from December the 11th with 7.9 million shares. If we take a look at what the diamonds did, They, in essence, completed the 1-to-1 A to B equals CD down, taking to 156.81. Didn't get all the way down there, but as we saw, taking a look at the daily futures contract, they actually made the 1 to 1.272 A to B equals CD down. They did that on Sunday evening. So we made the 1-to-1 A to B equals CD down. I'll go ahead and erase that off of my screen. Now, the normal retracement of A to B equals CD down pattern is your 0.618 level. If we go from the high down to the low, what we'll see is price right now is traveling above the 0.382 level. So price has made it up to that dead cat bounce. Price has made it up to that elevator. It's allowed some passengers off. So long as the diamonds stay above the 158.81 level, they want to travel up to 159.87. Well, heck, if you can make it to 159.87, why wouldn't you go pay a visit to that swing point that's sitting there on December 9th? That's at the 160.11 to 163. 160.53, I should say. Oh, shoot. If you can make it up there, and that's a 0.786, which is also a test of the swing point here from November 29th, and that low is 160.58, I would say that that is more likely what will take place. Now, that's not going to take place until we see, obviously, the futures contract break through its descending price channel. So it did, and it behaved really the way that it is supposed to, which is that acted as a deflection point. So this is how you can go ahead if you're trading intraday or you just want to understand how different patterns work, because these same patterns work on larger time frames as well. That's really what was going on inside the market. So we'll flip back to the daily chart, the 30-minute chart here. You can see that price was also moving in towards an overbought condition out here as it was getting up into that high. But so far as volume, it was making a high with 15,000 contracts. Its first pullback was on 7,000 contracts. We're in the next 30-minute session here right now, which doesn't end for another, 40, about 20 minutes. So we only have 2,000 contracts. No way to get a read. But that first pullback was, in essence, really on some light volume. Remember, that's going into this bar here with 22,000 contracts from 10 o'clock yesterday. So the pullback that we're seeing here is light. But a real breakout occurs on the 30-minute chart when we get above this descending price channel. Now let's switch over and we'll go do the same thing. Let's do it with the S&P 500, because the S&P 500 is the ETF, is the futures contract. Well, I'm sorry. Let me restate that. Let's go look at the ES Mini, because that's really the futures contract that if you are, whether you're bullish or bearish, is the one that you want to be paying attention to because of the message that you ought to get from here. Because in the ES Mini, it broke its descending price channel. Again, coming off of those highs out here, you can see that if you're watching us on Tiger TV, really cemented a good low, cemented a good high out here, and broke through that level. So right now, 1770, pull back to 1770, would really test and try to get back inside the price channel and say, okay, it was a false breakout. On the other hand, a test of that level and staying above there. And so far, all that the ES Mini has done is made a dead cat bounce, a 0.382 retracement back to 1773. 1774 is the actual number, and we got a low of 1774 during that 10 a.m. session out there. Now, volume on that pullback was 184,000 contracts versus the move up with 239. So actually, that's not too shabby out here. You're trading right at about that little breakout session from 10 o'clock yesterday. So the volume to the downside on a 30-minute chart was, is less out here. So you want to be paying attention to this. This has already broken the rising or the descending price channel out here. Now, if we go take a look at what's going on inside of the SPY, here yesterday, it went ahead and moved higher with volume of, give me a moment here. This was moving up yesterday with a volume of 96 million shares versus 130 million shares. So the SPY on the ES Mini shows the strongest breakout, yet in the ETF structure, it's weak compared to the downdraft that it went into. Nonetheless, let's go take a look at what kind of retracement it has done, because in the ES Mini on a daily chart, let's go take a look at the daily chart out here. What it did, because of its overnight action, let's pull this. That's the Dow. Sorry about that. Here it is. If we take the ES Mini back, what it did yesterday was it completed a 0.786 Gartley buy pattern. It did that at about 10 o'clock in the evening on Sunday out here. Now, if we take a look at that, let me get rid of the A to B equals CD pattern. Let's just take a look at the normal retracement levels on the futures contract. Let's come from the high of November 29th out here, the Friday after Thanksgiving. And yesterday's bar into and above the 0.382 retracement. You're still above it, which is at 1776.35. You're slightly above it right now, but a nice real wide-ranging bar coming in there. That says that really 1799 is where, in my opinion, it wants to travel up to. That's the 1800 mark. 1790 is your 0.618 area, but the bar was just too wide yesterday coming into that area, and that's what the ES Mini looks like. So back to the ETF, back to on the daily chart. If we take a look at retracement levels here, the retracement from November 29th down to the low that was put in on Friday, it is traveling right below the 0.382 area, but I would have to say 180.23 to 180.90 is the number out there. So far today, the volume here has been 23 million shares. Again, yesterday was 96 million shares. What we've seen so far today, 177.77, is a test of the swing point from December 12th out there, the high, which is 178.86. Hey, if it closes back inside that, it ought to at least go test the lows of 177.76 out here. That had 115 million shares. So that's what's going on inside of the SPY. Let's go take a look at the Qs, then we'll go take a look at the NQ and see what it is doing here. Yesterday, the Qs moving higher with 24 million shares, going into the downdraft with 36 million shares. So, kind of somewhat tepid, if you will. The pullback here, and this is probably, I guess I'm going to switch. I'm going to jump charts here because, and then we'll go back and we'll take a look at the NQ. But one thing that I want to point out, you've got the S&P volatility, the VIX index is up 12 cents right now. It's trading out at 16.15. Let me get rid of this A to B equals CD. Now, let's go take a look at the VIX, and we'll come back and we'll pay attention. We'll look at it by comparing it to the Qs. Now, you know that when the VIX is above, if you're a listener of mine, when the VIX is above the 50-day exponential moving average, that is when the most carnage is done in the market. And I can prove that to you because I've got on the top of my screen here is the VIX chart, and on the bottom of the screen is the S&P 500. And I have notated in these yellow boxes any kind of retracements that we see when the VIX pops above that area and the lows that it makes. Now, actually, I guess I'd really show that here inside the S&P 500. VIX has popped above this area on December the 12th. And look at the lack of damage that has been done inside of the market. All we've seen here, this is not normal. This has got to makes me say, what does this mean? What does this mean? Because in prior time periods, when the VIX makes a jump the way that it does above the 50-day exponential moving average, it has more damage than what we have seen in the markets here at this time. So what does it mean? It means that people are paying premiums, prior to the Fed meeting, I suppose, is one thing. People are willing to pay more insurance, to perhaps protect their profits that are already in place out there. What it doesn't mean is it seems to have lost some of that correlation effect that with the VIX here being above the 50-day, that we just simply have not seen the type of damage that I would expect, at least, and I think that you should expect it as well, that we have seen traditionally in the past. To me, that is actually a more bullish sign than bearish sign out here. Look, you still have to be cognizant and cautious and realize something's going to catch up here. I don't know which it is going to be, but you would expect more damage that should have been done inside the market. And when you take a look at some of the strong indexes, there's been very little damage. And that was really the point in taking a look at the ETF structure, because it was December 2nd. So let's go to December 2nd inside of the Qs. December 2nd, the close inside the Qs, 85.48. You know where you're trading right now? 85.29. Come on, you're talking about 18 cents out here with the VIX being above the 50-day exponential moving average. My take on it, I'm just giving you my take because it's the only thing I can't give you. My take is that is more bullish than it is bearish out there with regard to what's really going on. And people just want to pay higher insurance costs right now, and that's really the meaning. That's the message behind that. Now, let's go take a look and really see what's going on intraday so we can get a feel for what the NQ is doing on a 30-minute time frame. As we take a look at the 30-minute chart here for the NQ, it is, which has been the strong little dog out here. You can see that it broke through its descending price channel This is the March contract that we are using right now. Now, it broke above this level here with some nice conviction. That was at 10 o'clock yesterday morning. Contracts on the way up, 42,000 contracts on the way up. This is a little pullback here, back inside the descending price channel at 10 o'clock this morning, 31,000 contracts. So it was also really, in essence, testing that low out here. And you can see that price inside the NQ really trying to just test and hold this descending price channel. If we can see some other kind of a breakout above this level with some conviction, you will have seen a change in trend from a descending price channel standpoint with regard to the NQ out here. And again, we took a look at the Qs, we took a look at price and the VIX just to try to put that entire correlation together. So it's like I say, you don't have to trade the futures, but what you should do is you really should get access to the data so that it helps you to more stitch what is going on. Like if you were truly an intraday trader of the ETF structures out here, doubles, triples, singles, whatever they are, and you're not utilizing the intraday charts of the futures contracts, you're doing yourself a disservice. Because when you've liked to have known, when the Dow was punching up at 10 o'clock or sometime during the 9:30 to 10 o'clock session, as it got up to 849, what it was doing, and then it was running right into resistance. Might have been a time period where you took a little bit of money off the table, not necessarily have gone short, or it would have been a point if you were waiting to go short, that would have been the place to have jumped right on the area, because a break above that, you would be on the wrong side of the trade. So that's really kind of like your line of demarcation, your war line that's out there. So let's go take a look at the Russell 2000. Let's go look at start off by looking at the IWM. Let's go see what it is doing at the moment. The IWM here, that had completed a pattern as well. It completed the 1-to-1 A to B equals CD down. Let's go ahead and get rid of that Gartley buy. But here's the pattern that it completed. Now, yesterday's move was up with volume of 33 million shares going into a downdraft with 47 million shares. Really closed right on that line out there, meaning the high of December the 11th. But a nice bar nonetheless yesterday. If we take a look at the A to B equals CD pattern, the normal retracement, you can see above the 0.382 level says that the likely move inside the IWM is up around 112.31. That's your 618 retracement, which will also test the December 6th swing point. And that's got 36 million shares, and should that test take place, then if you're coming in with more than 36 million shares, price ought to test the high at 113.10, and that really sets up a move all the way back up to the swing point high on November the 29th out there. Now, the volume there on November 29th needs to be basically doubled or so. It shows 15 million. It's probably more likely 30 million or so out there inside of the market. So that's what's going on inside the IWM. Let's take a look at the ETF structure here inside the Russell futures. And as we take a look at that, now remember on my Russell futures, I've got a 10-minute delay out here, but there is its descending price channel. It has not broken. It has not even tested the top of the descending price channel. So the Russell 2000 is a bit weaker than obviously right now the ES Mini is the strongest because it's broken and it stayed above the descending price channel. NASDAQ is number 2, and we know the Dow ran into the top of that descending price channel. So we can see where the struggles are, where the battles are taking place inside of the markets. Right now we've got the Dow is trading down 4. S&P is off 5. Goldilocks is back $13. Silver down 22 cents. It's trading out at $19.87. When we get back, we're going to go take a look at Solar City for our man Gold 25 in the Tiger's Den. SCTY. You can't say that too quickly because it'll sound like something else. But we'll go take a look at Solar City when we get back from this break.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
I believe that we're all here to contribute something unique, and that deep within us lies a special gift, a special talent, our own bit of genius, just waiting to be tapped into. When it comes to trading and investing, I can help you tap into yours. Hi, I'm Steve Rhodes with TFNN, and on Thursday, December 19th, I'm hosting a 1-hour workshop where I'll share with you my most incredible discovery yet, the Rhodes Momentum Indicator. I developed this tool with one outcome in mind, to do what nobody else considered possible, to put the power of the most advanced indicator, scanner, and trading strategy in the hands of people just like you and me. I can promise you this, you'll never look at a chart the same way again. This event is available to all subscribers to my newsletter service, Mastering Probability, which for the holidays is available free for the next 30 days. No charge whatsoever to new subscribers and no obligation on your part. Please join me by going to the homepage at TFNN.com to sign up for this once-in-a-lifetime opportunity.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 18, S&P down 7 points. We're going to go take a look at Solar City. They design, install, sell, lease solar energy systems to residential, commercial customers out here. Right now, the stock is trading out at $53.16 out here. This is a IPO. This is one of Elon Musk's company. Is that how you say it, Musk? This IPO comes back to a year ago. So December 13th, 2012. Came out at about $9.20. That was the low. The high that session, $12.70. Again, is trading out at $53 and change out here. Now, it had a nice sign of strength inside this equity. Broke out on October the 11th. That was at a price level of $41.85. Wide price spread, accelerated volume. It came back to that level, and it tested it here recently. Let's draw a line across the screen out here. Now, didn't actually get down and test that breakout area, but that becomes a strong area of support. That little gap out here, that is the test was on November 26th. Let's see if there's any real selling out here. Made a high with some volume, a little bit of institutional selling that took place on November 7th, but nothing there that is really so damaging, especially when you consider the two breakouts that it had here. Now the question is, what is it doing? Is it setting up an A to B equals C to up? Is it setting up something else? Let's see what the momentum, see if there's enough time frame in here. Solar City. Let's put this up on the screen. SCTY is the ticker symbol. Let me see what the momentum is behind this move. The weekly's not going to show me anything. Just hasn't been trading enough out here. So it's just in the cautionary zone as we speak here right now. It's not a lot of data really to get your trading range boundary lines either. So let's see what it's done off of the highs out here. Let's add a little Chapman wave. Let's see what we've done to the downside here. Let's just count it to the downside. So it's only made its third move to the downside after the trading session from November 4th. So that would be what your level C out here. And to the upside here, let's start off of that November 26th area. Let's do a quick count to the upside. Here we go. So only your second peak that's inside here. It's all going to be dependent upon what this does as it deals with the, looks like that is the swing point is December 6th out here. Could be making an A to B equals C to up. I can't tell you what this equity here is really doing at this moment. Your A to B equals C to up, though, that's likely what is unfolding. It takes you back up to the swing point high. That's got some decent volume out here that has not been tested, 65.30. The 1-to-1 A to B equals CD. That takes you up to 62.76. So that is likely what looks like is going on inside of Solar City out here. Now, let's go take a look at the markets. Let's go see what we've got going on today to pay attention to. Let's go take a look at the Euro Japanese yen on a 120-minute chart. We were looking at that earlier. Right now, it's under a bit of pressure here. This is a 120-minute chart coming off of over a month ago. This takes you back to the rising price channel that began on November the 7th or December 17th. Here right now, you can see that area is under pressure here. We'll see if this holds. If this holds, you can see on the 120-minute chart starting to get down into the sold condition out here, but if this level holds, you would see a market bounce from here. If this is a break of this descending price channel, that would suggest much lower markets, more further retracement. More further is not really a great combination of words out there, but you will cut me a little bit of slack, I hope. That's what's going on there. If we take a look at net declining issues right now, you've got net declining issues inside of the New York Stock Exchange. Net declining issues about 918. Made a nice stab yesterday. They needed 877 or so net advancing issues today in order to put the New York Stock Exchange into bullish mode. Folks, have a great Tuesday. Thanks so much for being here. I'll see you tomorrow morning at 9 o'clock or 10, depending on which show you listen to, or maybe both. Don't forget, you've got an opportunity to sign up for Mastering Probability. It is a Mastering Probability. I'll get it out here. No, I won't be able to get it out. Mastering Probability. You can try it. It's free.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.